on a consistent basis so that you really learn what you're doing and why. And to have that reinforced by somebody who you have a relationship with is pretty cool. Jeff, that's a so we're talking about brokerage accounts and what you need. Now that is a very good question. And I'll tell you why. Is because the way the markets are set up is that these individuals that you talk to, they're registered brokers, and they have all the answers on margin. So I could tell you what kind of account you might be looking at is that you want an account that you can trade the S&P 500 E-mini in that is streamlined and fast. And there are brokers that specialize in trading futures and trading the indexes, which the S&P 500 E-mini is one of. So you wouldn't do it in a necessarily an account that is set up for IRAs or, stock trading, some of those other things. So what I can do is I'll give you somebody to call, start there. And if you decide, first thing to do is get yourself set up with a platform, get yourself set up with real-time data, ask them, tell them you're working with Sol and you'd like to see about, trading the S&P 500 E-mini and have them give you the lowdown on it all. Right now, let's say for this information and you liked what Sol, was providing, then I would get the discount on his services, and I'm going to send that out to everybody now. Usually it's $379 here. It's on for 100, which is it really is a respected a show of respect to pay the 100. It's a show of respect to pay the 379 too. I'm tongue tying myself. I'm just typing in a contact. So I just sent that out to everybody too. See if I got that right. Tell me you want the Sal Especial. Make sure you leave your contact information if they don't pick up because it's the morning. Yeah, that's right. Now that's for anybody that is, hey, Joel. You should be. Saul could be in the background. He could be working on something. Or if you see the prices changing, then you'll notice that the market is quiet. But yes, it was moving earlier. It's just been flatlining a little bit. Hey, Steve P. Good morning. Hey, Timothy. Good morning. Hey, so how do the charts look? Are they? I know Saul can be in the background. Right now it's 9:23. He's coming in pretty close to the cash open here, so You will hear his voice, and then I'll be off in the background. I'm gonna just go through some people that are been coming in as a guest and haven't paid. Um, the discounted fee or any fee. I don't wanna. So those that are coming in as guests, welcome. For those that have been coming in for a while as a guest and just haven't decided not to pay the $100 for whatever reason, I did send out that thing. Just let me know if you've paid. Hey, Chak P, just let me know if you've paid. Sands, I think you paid. Let me know back in chat. So Jeff, I sent it out to you in chat. Are you not seeing the chat that comes out to everybody? I can try to send it out. I sent it out to everybody. Hey, Sands. Sands, you signed up for Sol's monthly, right? And do you see it in the chat? Okay, good. So it's a 312 number and an 800 number. Anybody else needs to look into the chat area? We do a lot of stuff here live. We don't do much to email. Everything is personable. We do talk on the telephone with individuals that are looking to get better at their trading and interested in Sol's. Interesting. Let me uh, let me see if I can send it to you directly, Jeff. That would be still in chat, and that's a very important one, Jeff. Don't lose that one. That's the one that gives you the discount. That's only available in that link, right? I mean, I can also give it out to you in audio. Why don't you write this down before Saul steps in? Just let me know when you're ready. All right, so it's Dan. It's Striker Securities, Striker, 312-987-0043. They got an 800 number. It's 800-669-8838. And let me know if you see it also, Jeff, in the chat, because I just sent it out. It's in the chat? Oh, great. Yeah, I might have hit something wrong. Hey, Chak P, let me know what you're doing. And Sands, did you answer about whether you're part of Sal's Monthly or not? And Chak P, just let me know. Hey, Chad, how did the class go yesterday? Chad just joined Sal's class, which is the intensive that I was talking about. It's a very dangerous thing for me to throw that out there. Oh, good. Okay. Well, it was just the first one. Now remember, follow up with him. and he'll follow up with you about scheduling again.
All right. Good morning, everyone. Can everybody hear me all right? Okay, I guess you can hear me all right. Hello there, Jeff. Welcome to the room. If you have any questions, please feel free to ask. I'll explain what we do here in a minute. Let me give you our levels for this morning as the market's about to open up here. Our pivot this morning is 38.10, 38.10. Resistance above at 18, 25, 30, and 38. Support below at 10, 37.96, 87, and 78. Pivot 38.10, support at 38.04, 37.96, 87, 78. Resistance on the upside at 18, 25, 30, and 38. We are trading mini S&Ps here. We don't believe the markets go straight up or straight down. Consequently, we're looking for opportunities to scalp the market, take advantage of those inflection points where the market would bounce off of. We look to take 2 to 3 points on our trades, and for some of you who are in here who are new, each point is worth $50. So 2 to 3 point stops, 2 to 3 point profit targets, and we look to make about on average 5 trades a day, maybe, in the morning hours. Patience is important, and if you overtrade, then you get into an issue with having to pay too much commissions, and we try to stay away from the giving away our money to the brokerage houses, which I have a problem with. Pivot again is 38, 38.10, support 04, 37.96, 87, 78. Resistance on the upside at 18, 25, 30, and 38. We use these levels as a guide to the day, plus also we look at price action opportunities that occur once the market paints some bars. If you ask why we wait till 8:30 for the market to open up, that's when the market traditionally opened up when the big S&P contract was open, and the big S&P contract only traded on the floor, open outcry in a trading pit. And so traditionally the markets kind of wait till about this 8:30 bar, which starts right about now, to officially open the market. I know obviously it's open overnight, but officially open the market this morning at 8:30. There's other official markets that open up. Bonds open up at 7:20. I think the oil opens up at I want to say 9 o'clock. So if you're going to trade other markets, it's good to know when they're officially kind of opened up. Okay. Anyway, so we teach a methodology here that allows us to scalp the market, which means to take opportunities to take 2 to 3 points off of our opportunities, off of our setups. There's obviously other ways to trade the market. You could position trade, you could long-term trade. There's different ways of making money in this industry in futures. It's just obviously you need to know, what to look for, what ideas, concepts, technical and fundamental, and you put those together in a trading methodology to help you find the right form for you to trade in. We do this every day, and I used to be on the floor of the exchange, but we had a little booth up there, and you can hear some of the banter back and forth between some of the bit traders who are still trading, and they were trading the options. The banter meaning the screaming, yelling, which I did for a long time there when it was fun to trade in the pit, and then it became not so much fun to trade in the pit because everything kind of went to electronic, and thus we are all here now from the basement of my house. Hey, what do you know? Fun. Isn't that fun? All right. Yeah, so you can see it's been very, 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 very quiet overnight. Nothing happening. We did have a leakage of the amount of stimulus that Biden was considering. He's supposed to come out with his package of stimulus today. I heard it was leaked yesterday, not so much a leak, but last night, I'd say, middle, about 8 o'clock, 9 o'clock, and that the stimulus number was going to be about 2 trillion. And that created a little hiccup there in the bond market. The bond market has been a little sensitive to the inflation fears, and they flushed the bond market down last night really quickly down to the they got all the way down to the 68.20. You can see here they're 69.05. So they came back, most of them a good chunk away. They broke about a point really fast when that news came out about the how much the amount of the stimulus was going to be. Bond market though has been has been very, very weak. Concerns about inflation, like I said, but the last couple of days they've bounced back up here a little bit. Some would say maybe a dead cat bounce. Some would say maybe that was it for a while. The reason that they had a nice little bounce over the last couple of days were the 10-year auction and a 30-year auction. Both of them were very, very well appreciated, liked, wanted, supply and demand type of thing, and they had a nice rotation back up here to basically they like what they saw, and that's what they're doing. So we are, again, as you can see here, very, very in a tight little range as the market absorbs or tries to figure out which way it wants to go. We are in the midst of the trading range from Friday. We are right smack dab, and well, maybe a little bit. I don't know. We're right in that range from Friday. If you look at Friday's daily, we have been trading in it for the last 4 days. We did have an unemployment initial claims number that came out this morning, which was exceptionally weak. As you can tell, I'm talking over the market, not doing anything. I could make it look like we're busier if I do this. Look at the charts, and voila, we're really busy. Right? It's not really how it looks. And then I could make it look like we're really not busy by doing this. Okay. We need this. We'll just make it look kind of normal. Let me see. That's how we are. All right, we'll see what happens, right? It's very, very quiet. So we obviously need to wait for the opportunities here. 96. So we have to wait for the opportunities to present themselves. And consequently, we have to be patient. Like again, we don't like to trade when it just bounces back and forth in a little bit of a range, otherwise known as range bound. And we can see here over the last few hours, that's what we've been at. So even though I'm talking, about other stuff, believe me, if there was a trade about to happen, I would tell you. All right. Mark, by the way, the support level, the first support level is at 96. You have 98. Thanks. Could you good morning there, Peter. We'll have our class later this afternoon at 12. For those of you who are new here, we obviously teach our methodology of trading. If you're new to futures trading, or if you're new to trading or need to expand your horizons a little bit with some new concepts and ideas, that's what we'd like to do here. Thanks. And we do we have our class in the Zoom room here with using live charts, and obviously it'd be nice if the market moved around a little bit, but hey, it's okay. But we do like to use live charts that give us uh, good, to show you what we're doing and what to look for and so on and so forth. So, um, all right. So again, the bond market's a little bit sensitive these days to what's going on with the extra amount of stimulus that might be coming out of Washington. So we'll see where that takes us. The market here stays strong in the light of a very terrible initial claims number that came out at 7:30, and they were expecting 700. It came up over 900 and some. Another bad number there for employment as new shutdowns over the COVID situation because of the increased number of infections here over the last month or two has really hurt a lot of people. And every time you think that things are getting a little bit better, they seem to get a little bit worse first. Obviously, the vaccine thing is a good thing, but the lack of distribution is giving it out to people is causing a little bit of an issue, I think. But the market here doesn't really, unemployment's bad. The economy's crap. Doesn't matter. It stays up here. We're almost at all-time highs. And that's mainly due to the stimulus situation coming out of Washington, then especially since Biden won the election. And so and they won the Senate, so it's not going to have an issue there about passing anything. And so it's come to the forefront. That's why the bond market's a little bit crazy, and that's why we're up here in the face of all these bad news. We have terrible numbers of 4,500 people dying in a day, and the numbers of people in the hospital is huge. And but still, we seem to be going. It doesn't matter, right? It just doesn't seem to matter. As we are hovering around a pivot here, just hanging at 10, just doing its old little thing here. I call this a no trade zone. There's nothing to trade here. We don't have any setups in this little area here, so patience is important. We will get opportunity, even though right now it doesn't seem like we will, but we will. And having the fortitude to wait on the sidelines until opportunity occurs or present themselves is very important. And to think that you're not going to ever trade because it's so slow, don't worry, you will. So patience is important. You know that when the markets starts whipping around a little bit, we could have 5 trades in a half an hour, right? So it'll make up for it. At the end of the day, all the stuff averages out a little bit. So there's no concern, or you shouldn't have any concern that you have to have pressure to put on a trade because the bell rang and we're settled in here and we're getting ready for action, and then there's nothing. That's the beauty of this business at the same time as it is the curse of it, right? You don't know what's going to happen every day, right? Day to day. That's kind of fun. I think. But hey, I'm used to it, obviously, since I've been doing this for a while. As we're hovering back around our pivot again. Hey, what a surprise. Again, patience is very important here to kind of let the market try to figure out exactly what it wants to do. Okay. Again, anybody has any questions, feel free to chat up, put them in the chat box area there instead of the Q&A section. I have that window up and I'll be able to see it a little bit quicker. And so that's where we're at. When the blue line overlaps the green line, overlaps the red line, especially well, that happens in the hourly, things are dead. Right? Um, and that green line is getting awfully close to that blue line in the hourly there. So it's right on top of it in the 5 minute. That's shows you we're not really going far fast. But it's okay. Like I said, consolidating here. We have a dominating bar from Friday, and we're just kind of hovering here in the middle. Yesterday we had a couple trades. Um, today not yet so far, but you never know. Let me see if there's any fundamental news that comes out this morning. We did, like I said, have the initial claims number that came out, and import-export numbers came out. A lot of talk between the reason that the bond market, in addition to uh, the auction results that they rallied, also some of the Fed speaks that we're talking over the last couple of days hinted that maybe it's overshot a little bit. So the question is, once you get a position, do you immediately put a stop order in to protect yourself? Well, I would say that would be a good idea. One way to do it. The other way to do it is to have a finger stop that if you sell, if you have bought or sell it, and you have where your 3-point target is, both profit and loss, then you could do it that way, or you could do it mechanically. Either way, whatever makes you comfortable. But yes, I would. But if you're going to put the stop in, you should also have the profit target laced in at the same time. 2 points, 3 points, whatever it is that you're kind of looking for. But yes, I would say this becomes a bigger issue when the markets are moving around a little bit, that you should protect yourself, and it should be on there really quick. Markets are a little bit slower. You could probably do it manually, and so either way, doesn't matter. I'm just used to doing it manually, but I like to tell new folks to do it mechanically so that it takes that fear out of it. All right, there's a lot of people sometimes get scared of what's going on with the markets, but I've been through some interesting markets, and I was impressed with the way the markets were moving in last March, and they were crazy. That was impressive what they were doing those days, I have to tell you. So the market never ceases to surprise me. That's for sure. All right, so today we have the initial claims. Import-export numbers came out already, but the initial claims number was awful. But still, the market really, as you can see, didn't really do too much. We have a lot of Fed speaks today at 10 o'clock, and then at 11:30, the big man's speaking. Powell is talking. He's giving some kind of speech at 11:30 Chicago time. So if we're trading around then, and we don't like to trade when there is fundamental news or something that could move the market that's beyond our control. When there's a number that comes out, we like to be flat. Initial. If we were opened up at 7:30, we'd be careful here. That's why the bond market, by the way, opens up at 7:20. But they wanted to take into consideration when the numbers used to come out. They wanted to be in the pit trading. So they opened up the market at 7. We used to open up at 8, and then we would be sitting upstairs. I remember there's this when I first started trading, when we would be sitting upstairs over in the coffee shop overlooking the pit, and you can see the cash market whipping around a little bit, and you're like, whoa, why aren't we in there for that? And then they switched it so that we opened up at 7:20 to take into consideration the 7:30 release of any on fundamental news that comes out. Yeah, I am sure you do, Don. Don misses the days when the VIX was trading at 9 and 10. Yeah, yeah. You're funny. Maybe that's why people are waiting. No, no. Really, the market, I think, is on hold here. You're getting terrible economic numbers. Initial claims was bad. COVID situation's awful. You have our government is in some kind of disarray. Um, but you have one constant that's positive. Well, two. The stimulus that's keeping the market here kind of hanging, and the hopes of a vaccine kind of taking over at some point and doing well. So you have the two things that are counter balancing each other, and who's going to win, right? Is the vision of better times, the economy stepping up a little bit, turning over, or is it going to be still under some tight constraints and held back because things are not opening up as quickly as people think, and how much is the stimulus going to be? And you got, again, we have to get these numbers down. I mean, no matter what. It's. I just think if you look at the bigger picture, we can see why we're just stuck here. And the market is kind of staying within. They made new highs on Friday and broke it. Over the weekend. And basically, we are been stuck in this range. So it does the market does kind of consolidate. It was a big run, right? If you think about it on a 5-minute chart, you had a run, and now you're flagging, right? Staying within range. And the market rallied for the last week and a half before Friday, and then ultimately made an all-time high Friday, and just came back in this range. So it's kind of flagging here. We get above the top end of that flag, and maybe we'll continue to rally. We get below, maybe we'll pull back a little bit. That's all that it's doing, is just doing it on a bigger picture kind of situation. So, I mean, that's how I look at it. Nothing wrong with kind of consolidating here a little. I said yesterday is the quiet before the storm. Again, all of this is fine. We are going to break out. It's just when, and you got to save your bullets so that when you do break out and market does come back, you guys will be ready to attack. You're not going to be in the hole, trying to make up some stupid money that you lost because you had to trade when there was no trade. All right. I mean, I hate to say it that way, but I just say it the way it is. So I say it the way I see it. Anyway. Well, so the question here is, somebody asked the question, and is that lazy money that is not in the market, which is going to result in more demand versus supply. That means the market might rally more, regardless of supply quantity, and that the U.S. markets are the best option for return in the low interest rate environment. Well, that has been true. The market being the best return in the low interest rate environment for a while, that's why the market, I think, in addition to everything else, is where is why another reason why we're up at these all-time highs, right? I mean, you do have the prospect after the big break in March of maybe a little bit overdone, and then you've had some really great returns if you were liquid. That's the problem with all these breaks that happen in these markets. Same thing that happened in '08 or '07 whenever we had that big break. If you were liquid, you had some great opportunities. Same thing happened in March. You had great opportunity. The problem is that most people get stuck, or there's a reason the markets are going down, and your liquidity issues becomes a problem, right? So yeah, I mean, I think the markets over the last 8 years, especially since Trump come back, that's the place to be. That you needed to be in the market because you're going to get a much better return in the market than you were going to get at 0% interest rate or whatever you're going to invest in the bond market. So yeah, absolutely. That has been the case. The question now is that going to continue? And if that continues, with the fact that they're putting out all the stimulus, you're getting inflation fears coming back into the market. So once you get the inflation fears that come back into the market, you are getting an uptick in interest rates, which corresponded to having really good auction results, demand over the last this week in the auction bond auctions, which because everybody was so happy to see bond prices yielding so much, and so they all came and bought some of these bonds. So as a hedge, I think, to any kind of fallout in the market. And the market historically has been doesn't like democratic control because they're worried about more regulation and taxes and so on and so forth. But I've said this even before the election was there ain't going to be any kind of it didn't matter who was going to win. You were going to get another stimulus deal in addition to the one that they already had, because you had to have another one. I mean, they weren't going to let this one go by. I mean, Powell was talking about having another stimulus before they came up with the last one, because he said he can't do it himself. So, and I said this, I didn't understand why Trump wouldn't want a bigger stimulus bill before the election. He got it after the election, and they were still going to get another one, because we're not getting out of this cycle here with this COVID thing, I think, for at least another year. I mean, things might be brighter. And so there's going to be some artificial stimulus into the market either way. All right. There had to be. There has to be. So this is all my thinking. I'm not writing a book. I'm not publishing it. I don't take any responsibility if I'm wrong. This is my book, just putting it out there. Disclaimer. Anyway. So anyway, yeah. So I thought for the next 2 years the market was going to, be a little somewhat strong. Obviously, the numbers really got bad really fast over the last 2 months, and so that's putting a little bit of a damper on things. But yeah, I mean, the bond market, like I said, is going to be the key to calling an end to a rally. And what they've been doing, or some of these people have been fearing, is that bond rates have been going up, bond prices going down. It's almost calling a top to this market, at least temporarily. All right, and then, but we'll see. I mean, look, if they come up with this new plan, it's another $2 trillion. That's a third of stimulus to the economy, of any kind of economic stimulus. I think like the economy might grow at $8 trillion or $9 trillion a year, something like that. So, they're trying to keep everything from, double dipping, which I don't blame them. I mean, they did the same. That's what the government's there for. They did the same thing with the financial crisis. Everybody blamed them for coming up with this huge package to bail out some of the banks, but they needed to do that at the time, and they need to do this now. I mean, this is just, they got paid back well with the 2008 stuff. The government made a lot of money on those MBSs and bond buybacks, and they just kept everything floating. Again, same thing here. Is just a matter of, so once things get settled down here and they try to figure out how to deal with this pandemic and the vaccine thing comes out, and the economy starts turning, are we going to, is the market going to continue to rally? I don't know, because now once that happens, I think you're going to get, how are we going to pay all this back talk? And that should happen also. So we'll see. But it's a pretty strong market nonetheless. Do you buy the market here? And I don't know if you can buy the market here, but I wouldn't say not to, because like you said, there's no other place to put your money that's giving you some decent return. You just gotta be careful. I mean, I think there's another leg up personally, but when it happens, I don't know. And again, the other leg up will probably be because of this added amount of stimulus that comes in. At that point, then you got to think, okay, well, what's going to happen from here? Is the market going to, if the COVID numbers go down, and vaccine starts working, and the economy starts picking up, is going to pick up in a V shape, or we're going to do a bigger push to the upside? That I don't know, because people have all this, I don't know, extra money. I don't think they have extra money, but I don't know. So it could go either way, whether we continue to rally or not. I just think we're not going to go down much, at least not, because they're going to have another stimulus package behind us. They didn't even say anything yet, but they're supposed to bring that out today. All right. Traders seem unfazed by the second impeachment of President Trump, or even the possible conviction in the Senate. The events aren't generally market moving unless it is impacted by the ability of Congress to focus on main legislative agenda, in this case to help the economy emerge from this worst pandemic in over a century. According to market data from Dow Jones, the past two impeachments where market reaction can be tracked, including Trump's own, hasn't resulted in major moves in equity prices. President-elect Biden has also asked whether the Senate could schedule two things at the same time: it's impeachment and also confirming some of his nominees in the Senate. Major averages mostly higher on Wednesday. Again, still in the same range, like I said. So we are heading into earnings season right now. So that's I think that's what the market is kind of keeping its eye out. Companies have proven that they can drive revenues and growth with lower cost structures due to low borrowing costs, remote work, reduced travel. So traders are likely eyeing the numbers more closely than what's happening in Washington. So again, the market is looking at market conditions and looking at companies being profitable and not in these days when the economies are slow. And I think one of the airlines came out with their money and they lost money. First time in 12 years, but again, what are you going to do? 12 years would probably relate back to the 2008 financial crisis. So, it kind of makes sense. All eyes are on the price tag of President-elect Joe Biden's stimulus plan, which will be announced today and is expected to be in the range in trillions of dollars. Many elements of the package are expected to be drawn from the House Democratic Heroes Act, which passed in May but was blocked by a GOP-controlled Senate. Among the features are ranges of support for state and local authorities, a boost in direct payments to $2,000, expanded unemployment benefits along with funding to vaccine distribution, reopening schools, tax credits, rental relief, and aimed at small businesses. As we slowly inch our way up here, a little resistance around the 18 area. The upcoming broadcast is sending Treasury yields up 2 basis points and near levels not seen since late March. Despite the trend, Biden recently highlighted that the current historical low level of interest rates will bolster both the short-term and long-term growth outlook, saying it would reduce our national debt burden, and if we don't act now, things are going to get much worse. I don't know how that works, but okay. Reduce our national debt burden because of low interest rates? Okay. All right. Well, that makes sense. Okay. Anyway, my priority is to get, first and foremost, a stimulus bill passed. He announced earlier this week, then asked about concerns about that impeachment could delay the relief package. I've spoken with some of my Republican colleagues about being able to move on the second package sooner than later. Failure to win congressional approval could slam equities, which climbed to a record high last week amid expectations of increased spending. Chuck Schumer is set to be a majority leader in the Senate with the best possible control of the chamber. Vice President Kamala Harris cast the tying breaking votes. Possible holdup may be seen from deficit hawks who are Democrats from conservative states such as West Virginia, Joe Manchin, and Montana's John Tester. So it's not a given just because he has control of the Senate. That's what that's saying. It's good to know. Deficit hawks. Where are the deficit hawk Republicans that I once knew that passed a tax bill that added gazillions to the debt? But hey, I don't know where they left when all of a sudden they drifted away when they were in control. No idea what happened to them. A whole flock of them. Okay, that's the end of my political outrage. Is that an outrage? I don't know. As we are just kind of range bound here a little. Good rant this morning. This is what happens when there's no trade. I talk too much. I'd rather not talk and just trade, be honest with you, but it is what it is. What can I tell you? Let's see what else we can talk about here. Echoing comments from other public health officials, Moderna's CEO said the COVID-19 is likely to become a endemic disease, meaning it'll always be present in the population, but circulating at lower rates. It's interesting. Not a good thing, but interesting. SARS-CoV-2 is not going away, he told a panel discussion at JP Morgan Healthcare Conference. We are going to live with this virus, we think, forever. That's not good. Anyway, infectious disease experts would also have to be on the lookout for new variants of COVID-19 so that the vaccine could be produced to combat these. He added, while several new variants of contagion have already been detected in the UK, South Africa, Brazil, Japan, he believes Moderna's current jab, or vaccine shot will provide, as we come rumbling back down to our pivot area. This is boring. Anyway, will provide effectiveness against this mutation. He also claimed that the shot, which recently received emergency use approval in the United States and elsewhere, is likely to provide immunity for at least 1 year. Now we swiftly come back down here to our pivot. Nice little. See what it wants to do here. Again, I wouldn't. I mean, you know, if you're bored, only if you're bored you take this trade here. So I guess we have to keep taking the shot, huh? I guess you have to keep taking the flu shot every year, so it's not the end of the world, I guess. Okay, no problem there, Jeff. Of course, you can always jump in here. We you know, if you did buy the pivot there, you got a nice quick rotation. Pivot was also our blue band, so your blue banders there did okay, considering, like I said, if you were bored, you take this trade. That was it right there. Had a couple reasons to maybe dip your toe. Blue band and pivot. Jeez, giving me all these like accolades because I talk too much and not trade. How am I doing? All right, so we had a nice little bounce there off of our pivot. Back to our blue band off of initial little push up. So maybe some of you took it. Like I said, you have to be really bored to take it. Keep talking. I am making money. Thanks a lot there, Don. I appreciate that. You're the best. I don't know if that's a compliment or not, but it's someplace in the middle, I'm sure. All right there, Jeff, no problem. See you next week. We focus more in the morning hours, so it gives an opportunity for people to do what they have to do in later morning hours, but you know, taking your kid, just dropping off your kid at school is a good thing. Carpool is definitely a reasonable reason not to be here. Again, welcome to some of the new folks that are in. We are trading or trying to trade mini S&Ps. We're looking for opportunities to take advantage of ebbs and flows of the market. We're trying to find those inflection points where the market will give us an opportunity to scalp it for 2 to 3 points. We had a little quick trade here, even though it's really quiet. You too there, Jeff. Even though it's really quiet, we had a little bit of opportunity there where I said if you wanted to buy the pivot there, you could have. All right, Don, way to go. Don's respecting the blue band. He got out with the blue band. He didn't wait for lower. Nice. And we're trying to take advantage of ebbs and flows of the market. We're scalping the market, basically. For those of you who've come in a little bit late, we gave out numbers that came out this morning. That I gave out this morning. If somebody can repeat the numbers, you got to put it to all guests or. There we go. There are the numbers in the chat box area that we gave out. Pivot there being 10. I had a little dip back here to our pivot. First resistance level would be up at the 18 area. And we haven't gotten there yet. So, but we did have a little big dip back down to the 10 area there. Market doing nothing very quickly. That's true. That is very true. That's like almost a double negative, or is that a double positive? Doing nothing very quickly. Maybe it's a negative and a positive. That means zero. Let's see. One of the most powerful businessmen in the world, Jack Ma, founder of the e-commerce colossal Alibaba, but he found himself at odds with the Chinese government after he criticized Chinese state-owned banks last year. Beijing retaliated with an antitrust investigation into Alibaba and pulled a listing off of Ant Group, set to be the world's biggest IPO, in which Alibaba owned a third stake. What does this mean for future private business in China? It really depends on the outcome. If it ends up similarly to the United States or EU monopoly cases at the end of which the companies being investigated pay a large fine, agree to certain remedies, and carry on, it may not be a big deal, as everybody's thinking. On the other hand, if Alibaba, Ant, and Jack Ma are forced to radically change as a result of the probe, broken up, important units sold off to the state-owned firms, it could be a landmark moment for Chinese Communist Party relationships with the private sector. Where is Jack Ma? He hasn't made any public appearances since October 24th, and while there are rumors that he's gone missing, his friends say he's laying low for the time being. It's unusual for a man of his profile, but there are a lot of ongoing and delicate negotiations between the companies and regulators that he's not in a position to discuss. Chinese, man, they're a tough group. Investors are also starting to question whether Alibaba can pull off a sale of as much as $8 billion in offshore debt, which it planned as early as this week. That due to the uncertainty surrounding Ma, as well as the Trump administration's possible ban on investments in Chinese securities. Though recent reports suggesting Alibaba, Baidu, and Tencent might be excluded from the Department of Defense trading blacklist. Interesting, because I'm sure Don was going to go buy some big factory in China and produce poinsettias or something over there, and they would have they would eat his company up. They would never, he'd be making like millions, and they'd just take all his money from him. Chinese, man, they're tough. They are tough. Too far to go on his paddle boat. You gotta love Don. I mean, he's got a flip phone still. But his flip phone is advanced now. He can take pictures. He had one of the old flip phones that wasn't able to take pictures, but this one's a newer one. He's good to go now. Still doesn't know how to use it, but he's still good to go. This is what happens when there's no trade. But at least we had a little bounce there off of our pivot. Like I said, if you were a little aggressive, I know my aggressive friends in California took that trade. That I can tell you, even though he's all quiet, hasn't really talked too much. I do know what he likes to trade. All right, market coming up here. We got a little resistance around the 18 area. See what it wants to do. This is the Wall Street Journal's report on the initial claims number. Workers filing for initial claims jumped to nearly 1 million last week, indicating a rising layoffs amid a surge in COVID-19 cases at the start of the year. The number of applications for unemployment benefits, a proxy for layoffs, rose 181,000 to 965,000 last week, the Labor Department said on Thursday, but that puts initial claims at the highest level since mid-August and well above the roughly 800,000 a week they have averaged in the recent months. The increase is another sign the economic recovery is sputtering as coronavirus infections hit record levels nationwide. Economists surveyed by the Wall Street Journal expect the government to report unemployment claims were seasonally adjusted at 800,000. So again, another big miss. The current level is far less than the peak of nearly 7 million claimed in late March. However, workers are filing nearly 4 times more applications than they typically did in the first 2 months of 2020 and still higher than any other recession on record. So we got that little thing to worry about. It's not a good thing, but we shall see. All right, again, I do a lot more talking when there's nothing going on. We're looking at 18 here as a little possible resistance area. We had a little dip down to the 10 area, which was a little buy there for some of us who were a little aggressive or wanted something to do because you were bored. And we got a nice little trade against that trade, against that opportunity. We focus more on the morning hours here to stay focused. That we get better bang for our money, so to speak. There's more volatility. Yeah, right. I mean, who would have thought that I could say there could be any less volatility in this afternoon, but there could be. If they do come out with their plan, this $2 trillion plan that comes out in the afternoon, and I can't imagine the market's not aware of it, but if they do come out with it and you might have a little bit of a rotation in the market, but like I said, if I knew about it last night, I think it's pretty much well known. I am the last one to get any information. If I know about it, it's out there. I got no ties to anybody. Yeah, if anybody has any questions, please feel free to ask them in the chat box area. Good time to ask. Things are slow, and I've run out of things to talk about, for heaven's sakes. Even though Don still wants me to talk. We are going to be holding a class here in this venue later on this afternoon at 12 o'clock Chicago time. Anybody who's part of the course can obviously stay in the room. Otherwise, those of us who are not part of the course, we'll ask you to come back in about an hour after that. We'll reopen the room to everybody. Or obviously, you can get back here tomorrow morning. Well, we don't usually close. We're usually open the whole time, except for when we do have a class. So the room will be open through the close after the class is over. So the 12 o'clock Chicago time. Oh, I don't rant in the afternoon. Trust me. I'm not. I can't do this all day. There's no way. When I go through my emails that I read about business stuff, and you know that and the only reason I even talked about anything today, somebody asked me a question. So I like it when you ask questions, and I have to go into this deep dive. But I don't. This talking to me. Oh, I'm not a talker. I know you're all laughing right now. Yeah, right, buddy. Who are you kidding? Yeah, I'm sure there is. Yeah, I get reprimanded from Brad if I don't talk, and I have to have a certain amount of words to come out of my mouth, and of course, otherwise he gets a little upset that I don't talk enough. So he makes up for it usually. Most of the time, it's not a problem for him. I can't keep up with him. So, who has better pizza, Chicago or New York? Oh boy, now we're pushing it. Well, considering I've been in New York a couple times and I have had their pizza. Well, it depends. I mean, Chicago's famous for the deep dish stuff. That's a meal. You go to you go to New York and have one of those pizzas, you might get a large. I mean, you wolf that down in a minute, and about an hour later, you're gonna be hungry again. Might have to go to another pizza joint, get another slice someplace. Oh, let's not get. What's wrong with this grilled cheese sandwich? Bread and cheese sandwich. I guess definitely not from New York. I mean, definitely not from Chicago. If that's how you quantify a deep dish pizza, bread and cheese sandwich. The man has no idea what he's talking about. I hate to tell him. Look, I sent a bunch of these like deep dish pizzas to my friend in California, and he appreciated it. New York. Oh, you're from New York. Oh, there you go. Yeah, give me a piece. Give me a. Let's see, a sheet of paper. Put some cheese on it, and they say, "Here, here's a pizza for you." Okay, all right. That's what the melted cheese on a piece of paper, and say, "Here, hey, this is the best pizza in the world. Try New York pizza for us." Okay. I mean, seriously, you ever go to New York? They give you this like huge slice, this big triangle. But the reason they give you this huge triangle is because it's basically so thin that, I mean, you're like, what? And then if you put like a couple of sheets of paper on top of it, like napkins to suck the you know suck all the oil out of it. Ugh. So yeah, I can. You want to talk pizza? Let's talk pizza. I'm converted to Chicago after my daughter moved there. Very nice. Where does your daughter live? In the city, someplace, Anderson. Yeah, yeah. All my kids, they moved out of the house. They all live in the city too. They have all these like great names for these little parts of Chicago. Yeah, I'd see. It's time for breakfast. Anybody wanted to go have pizza for breakfast? There you go. So when we were trading in the pit, um, they're all cute little towns. I mean, and I do like the city has its parts. That's for sure. I don't know. They all live in different parts. I don't know what they're all called, to be honest with you. I just knew when I used to go around the city, I used to just travel around. I didn't have names of this section and this section. But if you look at like a Google Maps now, they do break up the city into these names. You know, but it's all nice. Anything around that area is nice. Lincoln Park and Andersonville, and they're all they're all nice little areas. So yeah, they all live down there. They all moved out of the house and go into the city. Like what? Like what? It's kind of different because I've been in the suburbs forever, and they migrate back in the city. I'm like, why? Why? But everybody was doing it. Everybody is doing it. Um, Don's telling me that they just deep fry their pizza in Texas. Yeah, so when we were in the pit, like we would trade like the morning till about 9:30 or 10, depending on how busy we were. Or, the other aspect was if I made enough money in the morning. It's funny, my clerk would obviously if I'm down money, I kind of I don't usually I stayed there a whole day. But if I was up a certain amount of money, my clerk knew what that threshold was. So, and I would never ask for my P&L from her. I didn't want to know, right? And I'd be trading most of the morning, and if I got tired or if I knew I was up but I didn't know how much or this and that, I never wanted to know if I was up or down money. I just traded. That's a difference now on the screen on computerized screen. You have your P&L right there. It's always right there. It's like, and I never wanted to know. I just traded the market, right? And so when my clerk, if she knew if I made a certain amount that probably I'd be happy and want to leave, and she would probably be right. She was with me for a long time, so she'd always, at that point, she'd always like give me a sheet of paper. Usually she's giving me a sheet of paper to tell me my position, but this time she'd give me a sheet of paper, tells me how much I'm up, basically telling me to get the F out of there. and and so that way she can get to go home early. and I get to go play golf and do whatever. So she always let me know when I was at that point, but I never did want to know how much I was up or down. Like I said, you had an idea. I had an idea, but I didn't have a number. But she always used to let me know when I got to that point. That was like her job, her secondary job. But we'd go like to have breakfast like around now. We would go right now to get breakfast because markets kind of, and there's a bond market, kind of slowed down a little bit. Things slowed down, and you get the afternoon trade. And then if you go back in the afternoon, like I've always said this before, and that's why we try not to trade the afternoon trade, because a couple of reasons. One is the volume is different. Traders, there's less traders in there. The volatility is different. And it's also called the loser bowl because, if you go back in the afternoon, you're done. Probably most of the traders are down money and they're in there kind of just trying to scalp it to try to get whatever money they can get back out of it. And usually it's depressing and depressing as far as trading is concerned. And it's not really a good group of people to be trading with at that point. So that's what we used to do. But breakfast was always good around this time. And breakfast could last an hour and a half. Because I get my buddies out of the other pit, we go hang out. And by the time we were done eating, an hour and a half later, I think it's time to go play golf. So that's what we kind of did. Don't tell anybody. Okay? Do not tell anybody that was my schedule. The cocktails. No. You know what? We were not into the group of friends that I had. We would just have breakfast, and if we would just go play golf. Really, that was like our bad thing. Is that I was friends with. At the time, he was like one of the biggest golf pros in Chicago. Everybody knew him, and he traded, and we became friends. So I got to go to play all these courses around the city that I usually don't get to play because they're private. But he knows everybody. He knew all the caddy guys there, so we would caddy master. So we would go and play all these courses. And he always never taught me how to play, but he taught me what I was doing wrong. So, and he still teaches now, but that was, so I guess I was drawn into the sport because of him. He was really good. I mean, he would try to get into these US. He actually did play in a US Open. At one point, he tried to qualify for a couple when he was here. So that's how I got into golf so much. Sounds better than being at the beach. It's sure as hell better than being at the beach. I'll tell you that much. I hate the beach. That's why when that guy said, "Oh yeah, you're at the beach all day," I'm like, "Oh yeah, that's where I want." Yeah, you're right. Sorry, Mark. I do hate the beach. I don't like to have the sand in my toes, and then no, it's not. Keep me on a golf course. So no, I don't. So I'll tell you a funny story about the golf clubs that I have. So my friend, obviously because he's a golf pro, he knew a lot of people in the golf industry. So I wanted to get, I told him I wanted to get a set of golf clubs. So he knew this guy that was producing his own golf clubs. Had this little, he opened up this little, place, and he takes me there, and we buy these golf clubs for, it charges me like $30 a golf, a one club, and so I bought a whole set from him. And he was trying to expand his brand, and but he was trying to sell them to the golf shops and this and that for $30 to $40 a golf club, and he couldn't do it. So the trick was, if you go and sell your golf clubs for $100 a club, and he couldn't keep them in stock after that. So for $30 a club, he was losing money, but for $100 a club, he was making money, and not because of not selling more people. He couldn't keep them on the shelf after that. So there you have it. Yes, you can definitely come on right now, because as you can tell, look where I've deviated to. Look what I've gone to. Talking about eating, going to the beach, playing golf, buying golf clubs. That's what I've deviated to right now. And you're asking me if you can come in the room and talk. What kind of question is that?
It's like you're talking to the rabbit or something, right?
Rabbit. I'm talking. My mouth is dry. I have no idea who I'm talking to. Once in a while, somebody says, "Hey, that's funny." Hey, okay. That's good. I made somebody laugh. That's about it.
You're calling in your ventriloquist dummy, right? You can take over now.
You could go ahead, because you know what? Let me tell you something. You see how busy we are? We're flatlined here. This is less action than your heart has every day.
It's funny. They had somebody had asked earlier if the charts were moving at all. It was like
No
10 minutes,
kidding.
and it just sat there. I was starting to question whether they were moving or not.
That's what happens at night.
Yeah,
we're getting this night trade right now, but it's okay. It's the quiet before the storm. It's going to be something.
Isn't it always, right?
Right. Something's going to happen.
You got to prepare for the storm.
Yeah. Save all your bullets. Save all your bullets. That's what I say. Save your bullets for.
So I just have a couple programming notes for your.
Oh, go ahead. Take over. I need to wet the palate here. My mouth is all dry from talking too much.
Got to go stick your mouth under the kegerator. You're all set. And I heard you hooked up the little miniature golf in your basement.
That's a really good idea, especially these days when I can't do anything.
Well, you should have your headset on and just, do whatever you want in your basement.
Yeah, I mean, I could.
You got to be untethered.
Yeah, I could, but
do you have the the earpods?
So I bought them, and I asked my daughter to help me hook them up so that I Bluetooth them,
right,
or whatever you do. So she did come, and she forgot to do it. So I have them. I bought them. And she said, "Oh, they're going to work fine." Are you sure they're going to work fine? She even came down to my computer and said, "Oh yeah, look, oh yeah, this is." She looks at it, she putzes around with my computer and says, "Yeah, it'll work." I'm like, "Oh, you want to do this now?" She goes, "No, we'll do it later."
So if you want to test it one day, it's not that hard to do. Except you have a you're not on a laptop, you're on the big computer.
Yeah.
That's the only difference. You should be able to find Bluetooth in there.
She said I have it, so she came and messed around with it, and she said it's good, and so. But now I need to get her back here to help me put it back on. So, and then we have to see if it works as good or not. So one thing at a time. As soon as I get her back in the house one time, if I bribe her and tell her I would feed her one day, or she can go shopping in our fridge. That's always a good one. They come in with no bags and they leave with 5, and then they ask me, to help them to take all my stuff to their car because they're going back home.
Yeah, and you just don't have one or two. You got a few. So
Yeah, that's why they only are allowed one per day because I have to go restock the fridge.
that's actually pretty funny.
The little
Right.
one does.
You're a good father.
The little one does that more than anybody. She comes in here and she definitely get a shopping bag and she she just puts her head in the fridge. Hey mom, did you get me this? Mom? I'm like, hey, what are you doing?
Oh,
She
that's
goes to the
funny.
pantry, raids the pantry. I mean, she's like, she got it all figured out.
You know, God bless them, right?
Yeah, that's fine. I don't mind. But it is what it is. But yeah, you haven't gotten there yet. Wait till they move out and then they got their own place and then they're like, oh, let's go shopping at mom's house.
Yeah, we're getting there, right? I got one back in college now, and I've got one here who actually has to study, I think, for one of the securities tests.
Oh, what you
So
taking
they
the
sent her a
G's?
book, and the book was, it's like 750 pages of crazy.
Which one is that one? The G7 or something?
I
Or
didn't
G?
even, something I just stayed away. They're having some sort of a call at 11 today.
That is one hell of a test. I'll tell you that much. I mean, I tried to take it. I tried to take it a while back, and when you don't go to school for a while and you try to they give you, like you said, 700-page book to guide you through. I'm
Oh,
like,
it's crazy.
okay, yeah, I'm not doing this now.
And they changed it all too, and they made it,
Well, they have to because there's so many new things out there.
yeah, and they made it crazy. So she's
So what
gonna
does she want to
take
do?
the
Work in
class.
She want to work in the industry?
Yes.
Hmm.
Yeah. So she's got some sort of a setup at one of the firms.
Hmm.
So it'll be interesting to see how that all develops. And then
Then
my
she'll
other
be.
daughter's thinking of doing the same. So we'll see.
Oh, really? Look at you. I got one daughter in finance, and she's a big shot. And she never asked me for. She used to ask me for my opinion. She doesn't ask me for my opinion anymore. That's kind of saddish. Um, and then the rest of them, one's a teacher, one's who works for other companies, but none of them went into the financial world except my.
It's changed dramatically too.
Yeah.
I mean, everything is part of the whole, connectivity to your phone, and all the, Silicon Valley, if that's still Silicon Valley, is moving into the loan business and the credit card business and like we bought a Peloton on a firm,
Hmm.
no interest, just pay your payments. It's like $62 a month or whatever for the Peloton
Hmm.
over a period of time, but there's no interest.
Hmm.
So, those, and I think a firm just went public.
The Peloton, yeah, they did. Yeah,
No, not
because the.
Peloton. No, the Peloton, yes, right. But a firm is the financing company.
Oh,
And I
okay.
think I just saw them doing something. I haven't really watched TV in, I don't know, a month, maybe 6 weeks. So I haven't watched a lot of those shows. But on my phone, I get a lot of crazy stuff. So I've narrowed my world down to the phone.
Well, that's a much wider place than ever.
Yeah, no, it's crazy. We upgraded with T. We went from Verizon to T-Mobile,
Yeah, I could
and we,
tell every time I try to call you, it doesn't go through.
well, we did it to save some money.
I know, but it just doesn't go through.
It's funny. Yes. So I have noticed that there are some instances where, so I'm probably saving half based on what I was using before, based on T-Mobile versus Verizon. And it's funny, Verizon sent me a final bill and I like almost fell over. It was like $450 or something for the final bill.
Mm. That's
They
that's
get
my
you while
month.
you're leaving.
Well, yeah, because you probably bought their phone and you didn't run out. They still had some time on them.
Yeah, they did. They had a couple months on there. So the new phones, I ended up getting $950 back over, I think it's a 3-year period for each phone. And I got 4 phones, but it's over time, so you get a little bit every month against whatever you were supposed to pay, which I thought was interesting. So I haven't figured out if I, on the right side of this transaction yet or on the
Oh no,
wrong
I mean
side.
they're giving you all that free money. You're definitely on the right side. The question is the service any better? That's all. You're paying for the service with the other.
Yeah, and I think there's no question that the service is a little bit behind,
Yeah, that's an understatement.
but they're 5G.
Yeah, I know, but so
It
what?
shows 5G and then nothing happens. It's like they got to put the number up with the G.
Yeah,
Mine's
yeah.
5 small g. It's not
Oh,
5 big G.
oh, that's the problem. That's the problem.
That's crazy. But anyway, so I have a couple announcements. One is Saul's giving a discount on his monthly. So those that are coming in as guests, welcome. If you want to come and go as you please for the month, it's $25 a week. Usually it's $379. So Saul made a good comment before that people don't want to pay the $100; they want to pay the $379. So I think we should raise it back to $379. Take the deal off, and I bet you people will be happier to pay the higher amount, just like the golf clubs. They'll see more value in the 379 than the $25 a week. But anyway, so right now it's 100. I will send it out to everybody. If you want to talk about Sal's course and mentoring work, join the family by signing up for his monthly, and then we can spend some time and chat about that on an individual basis privately. Hey, Alan D, you've been in and out, right? Hey, Dean, welcome. Good morning. I missed you before. Hey, Don, Frank, Glenn, Joe M. I'm not sure if you've been in before. I think we talked a little bit this morning. Hey, Joel, John F, AKG. Kerti, welcome. Hey, Kurt, Mark L, Peter O, Ralphie. Is it Ralphie? I think my eyes are shot. Robert B. Hey, Sands, I reached out to you a couple times before and asked you that question. I did have to remove a couple people this morning. You were on the list, but I held on to you. So just let me know what you're doing. I think you're part of Sol's Monthly. Just let me know back in chat. Hey, Timothy. All right, so I'll be in the background if anybody needs me. I did send out to all panelists and attendees the opportunity to sign up for Sol's Monthly. So check your chat. And it's a 2-second process. It's all done through PayPal. You can cancel on your end. You're in control. You can keep the $100. It does not roll to $379. If you're coming from the outside, click on the link and join us live in Zoom. If you need any trading platforms or you want to make a change, let us know. We'll be glad to help you. We're a full service organization for our monthlies. Right now it's 10:53 a.m. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. Your That's a very good question. The question is the market this quiet all the time? I know Saul has mentioned a few times that it is not. If you go back and look at your charts, obviously you'll see price movement and price change. When it is this tight, it's a little tough. One of the things that I had mentioned before is that, Saul's first level of opportunity is a minimum trading profit of 2 points plus. It's a little bit tougher to get 3 points, 4 points, 5 points when it comes to the market reversing on you. I always think that 2 points is readily available on most trading days. So there is an opportunity to make money based on scalping and trading the S&P 500 E-mini on the upside and on the downside. Sol's levels are given out in the morning. You can always ask for a repeat. Those become the actionable areas for Sol's price action trading methodology. Hey, Sands, are you back? Let me know in chat, Sands. There were a couple people that signed up for Sol's monthly smart move, since it's only $100, $25 a week, and the information here has already been worth its weight in gold. Again, I'll be in the background. When it's quiet, no worries. When it gets busy, just be prepared, and be prepared by being set up and ready to go, and also being schooled in what to do based on the risk of your capital and your money.